All right, so thanks for joining us today. We've got a really important topic to cover, especially if you're a UK taxpayer.
Yeah, that's right. And we are very grateful to ProTax Accountant for arranging this chat for us. They really are the experts when it comes to all things tax in the UK.
Yeah, they definitely know their stuff. So today we're going to be diving into voluntary national insurance contributions, or as you might hear them referred to as INCs.
Yeah, and while that might not sound immediately like the most interesting topic, trust us, understanding this stuff could really have a big impact on your future finances, especially when it comes to your state pension.
Right, because, nobody wants to be caught short when they retire, do they?
Absolutely not, especially with the cost of living these days. So yeah, today we're going to break down all the essential info about voluntary NICs using the most up-to-date figures and guidance from HMRC and gov.uk. Everything's been double-checked as of March 2025, so you can be sure you're getting the most accurate information.
Perfect. So let's get started then. Could you maybe give us a quick breakdown of what voluntary NICs actually are?
Sure. Basically, they're like extra payments you can choose to make if you've got gaps in your national insurance record. It's not the same as the NICs that you usually pay directly from your salary if you're employed, or as a self-employed person if you're earning above a certain level.
So it's not mandatory then?
Exactly. It's something you choose to do, and there are very specific reasons why someone might decide to make these voluntary contributions.
Okay, so why would someone actually bother paying extra NICs? What's the benefit?
Well, the main reason is to ensure you're getting the maximum state pension you're entitled to when you retire. You see, the amount of state pension you get is largely based on how many qualifying years of NICs you have. In this current tax year, which is 2024-2025, the full new state pension is £221.20 each week.
Yeah, that's a decent chunk of money week in, week out.
Right, and that's why filling any gaps in your record is crucial.
Now, when you talk about the scale of national insurance in the UK, I mean, we're talking huge sums of money here, right?
Oh, absolutely, it's massive. I mean, in 2024-2025 alone, HMRC expects to collect around £167.5 billion in NICs. That's a significant chunk, about 14.6% of all the tax revenue in the UK.
Wow, that puts it into perspective. So that's like, what, nearly £6,000 per household?
Yep, that's according to the Office for Budget Responsibility. So you can see how making voluntary contributions is essentially a way for you to engage with this system and potentially boost your own benefits down the line.
Right. So who exactly is eligible to make these voluntary NICs? And, why should the people listening to this be paying attention?
Good question. So you might be eligible if you have gaps in your NIC record for whatever reason. This often happens if you've earned below the threshold for paying NICs, like for self-employed people in the current tax year, that's £6,725. You might also have gaps if you've taken time off work, maybe for a career break, or if you were raising a family and weren't claiming certain benefits like child benefit.
Okay, so those are all situations where people could find themselves with gaps. So how long do you usually have to sort those gaps out?
Well, normally you've got a 6-year window to fill in any missing year. So let's say you had a gap in your record from the 2023-2024 tax year. You generally have until April 5th, 2030 to fix that.
All right, so 6 years.
However, right now there's a special extension in place which you really need to know about. This extension means that you've got until April 5th, 2025 to make voluntary contributions for gaps, going all the way back to April 2006.
Oh, wow. So that's like nearly 20 years, right?
Yeah, almost 2 decades. So this is a huge opportunity for many people to potentially boost their state pension, but you need to act quickly. This isn't going to last forever.
Definitely worth taking advantage of that. But before we move on, can we just go back to the basics for a second? Why are these qualifying years so important for our state pension? Like, what difference does it make?
Yeah, so to be eligible for the full new state pension, you need a total of 35 qualifying years. If you have fewer than that, your pension will be reduced accordingly. So if you're missing, say, 5 years, you'll get a noticeably smaller pension each week.
And if you don't have enough years at all?
Well, there's a minimum requirement of 10 qualifying years to receive any state pension at all. So yeah, each year really does make a difference.
It's all starting to make sense now. So missing even a single year can really impact your pension, can't it?
It can. Missing just 1 year can mean you get around £6.32 less per week, which might not seem like a lot right now, but over a year, that's almost £330 less.
And over, like a 20-year retirement, that could be a significant sum of money.
Absolutely. And, it's interesting. We see that a lot of the revenue from voluntary NICs actually comes from employees topping up their records. But for self-employed folks, these contributions can be particularly useful for reaching that magic number of 35 years, especially if they've had years with fluctuating income.
Yeah, that makes sense. So let's talk about the practical side of things for a minute. How much do these voluntary contributions actually cost? I know it's the 2024-2025 figures we're talking about here.
Right. So first off, it's important to remember that while the personal allowance for income tax is currently frozen at £12,570, national insurance actually kicks in at a lower level of earnings. So we're talking about the lower earnings limit, which is 6,396 pounds in the current tax year. If you earn less than that, you won't automatically build up qualifying years for your NICs, unless, of course, you choose to make these voluntary contributions.
Okay, and what about the different rates? Are there different types of voluntary NICs?
Yes, there are two main types. The most common one is Class 3, and for 2024-2025, that's 17 pounds 45 per week. So over a whole year, that comes to 907 pound 46.
Okay, so that's the standard one.
Right, but then we have Class 2, and this one is specifically for self-employed individuals who earn less than 6,725 pounds in a given year. So for people with lower profits, this is a much cheaper option at just 3 pounds 45 per week, or 179 pounds 40 cents for the whole year.
That's a big difference.
Yeah, it's much more manageable for people with lower incomes who still want to make sure they are covered for their pension.
So it sounds like it's less about immediately impacting your current income tax bill and more about investing in your future pension.
Exactly. These contributions are all about ensuring you have a decent state pension when you retire.
Perfect. Now, could you give us an example of how this might work in practice for someone? Just a quick real-life scenario?
Sure. Let's imagine a woman named Sarah. She's 45, a freelance writer, lives in London. So last tax year, her income was a bit lower than usual, around 5,000 pounds. This meant she didn't automatically qualify for a full year of NICs as she was below the self-employed threshold. So Sarah decided to make a Class 2 voluntary contribution, which cost her 179 pounds 40 cents.
And did that boost her pension?
It did. That one payment will increase her weekly state pension by £6.32 when she retires, or 329 pounds a year. So, she'll actually make back the cost of that contribution in under 7 months of receiving her pension.
That's a pretty good return on investment.
Exactly. So, it just goes to show even a small contribution can make a big difference in the long run.
Right. So what's the key takeaway you want listeners to remember from all of this?
Simply put, if you have any gaps in your national insurance record, making voluntary contributions can be a really smart way to potentially increase your state pension later on.
Okay, and for people who think this might be relevant to them, what should they do right now?
The first thing is to check your national insurance record online. You can do that through the HMRC app or the gov.uk website. It'll show you clearly if you're missing any years. And please remember that deadline of April 5th, 2025 for sorting out those older gaps going back to 2006. Don't miss out on this opportunity if you think it applies to you.
Okay, so just to sum up, voluntary NICs can be a really valuable way to boost your state pension if you've got those gaps in your record. And with that deadline of April 5th, 2025 looming for addressing those older gaps, it's definitely worth looking into.
Definitely. And for more personalized advice, I'd strongly recommend getting in touch with the professionals at ProTax Accountant. They can help you assess your situation and guide you through the process.
Yeah, great advice. It's always best to get expert advice when it comes to your finances.
Absolutely. All right, that's all from us for today. Thanks for listening.
Thanks for joining us.